Okay, welcome everybody to this evening's ACY Securities webinar, live forex market review. Sorry for the delay. A few technical issues coming on this tonight. All right, live market analysis tonight. Welcome everybody. My name is Duncan Cooper. If we can read through the risk disclaimer before we move along, that would be great. If you're on our YouTube live stream, I cannot see your chat. You're more than welcome to use the link I've given and join us in the webinar so you can chat to me. So, more than welcome to watch, but if you want to chat, just join us in the webinar. Anybody else, if you have a question, just use the chat box or the question box. Just waiting for a few more people to come in. Just get you all to read the risk disclaimer before we move along. All right, we'll move along. Now, if you don't know me, if you're new to the webinars, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor at ACY Securities. And I'm a full-time trader. I've been trading forex market now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there on screen. I did receive a nice email this afternoon from somebody I don't know in America telling me how much he appreciated my analysis. So that was very nice. All right, so my email is there if you want to send me an email. If you want to follow me through the week, then you'll find me on our website, acy.com. Go to the market news tab. My analysis is there. Our YouTube channel, ACY Securities Australia. And you can connect with me on Twitter and LinkedIn now. I'll just leave that on screen for a moment. Kodak, good day to you, wherever you are. I don't know which part of the world you're in, but I've noticed you've been on the webinars recently. All right, as well, through the week, if you want to get access to our Telegram channel, then contact Nathan.bray. I'll put his details in the chat momentarily. If you want to get access to my chart layouts and templates too, then just contact Nathan. He will organize that for you. So here's his details in the chat. If you want to set up a demo account with my templates, contact him. If you're interested in the live account, contact him. Or any questions, just contact him. He's the go-to man. All right, that's in the chat. Okay, let's get into tonight's information. Let's first look at the news for the day. Now, of course, this week we've had central banks. We've had the Australian Central Bank raise interest rates. We've had the FMC, the US Central Bank, raise interest rates early in the morning. We've got the Eurozone Central Bank, 10:15 p.m. tonight. That is Queensland time. And then we got the press conference at 10:45. Always a very volatile time. Very difficult to take a trade on a euro cross at the moment. All right, so be aware of the volatility that's going to be coming around the corner at 10:15 p.m. Euro dollar has been definitely selling off since yesterday's move up or early morning move up. So it's not easy at the moment, swinging from one end of the chart to the other at the moment. All right, later in the day, we have some, I say later in the day, at 10:30, we have the US unemployment claim. So around that period is going to be very volatile. Early morning, Bank of Canada, Governor Macklem speaks. And then tomorrow we do have some Swiss news, 4:30 p.m. And then obviously the Canadian and US job figures, 10:30 p.m. tomorrow night. So still lots of news coming out. All the big news events coming out this week, interest rates, job figures. All right. So it's very, difficult to take trades leading into these events. Yes, taking trades after, if you can see a setup, but if you don't have a trade that's in a lot of pips of profits and you can manage it effectively, if you're in a trade with some profit, you might want to just think about closing it down with the profit when these items come out, okay? Manage your trades effectively. All right, let's get to the charts. And I'm not sure what that spike up there is. That must be a very erroneous candle. All right. Hopefully that will sort itself out because that's not accurate. It never went up to 114.53. What did it do on the 50-minute chart? All right, so I've got an erroneous candle, so we'll just have to live with it. What I might do is just shut that down, reopen it, and hopefully it'll fix it up. All right, I'm just waiting to pick up. Now, when I'm doing my webinars, I'm just using a demo account because I don't want to obviously display my live account number. So I don't know whether in a live account that erroneous candle is there, but it's definitely there in my demo account at the moment. And it's still there. Or I'll just have to work with it. So let's get to the, all right. So I seem to have an erroneous candle on my dollar index and my euro dollar. So I've got my live charts on my other screen. All right, pretty sure the daily chart. All right, it's not affecting my day chart. So day chart low, if you need to know, is at 196. All right, that erroneous candle. Well, I'll just have to work the best I can on some of the. Hopefully that hasn't happened on a lot of pairs, but there we go. All right, now the dollar index is just holding. Here we go. Now I've got an erroneous candle there, but anyway, I'm just gonna have to work with it. We know we're not underneath here. We're just holding to an uptrend here at the moment. So with that being said, question is going to be over the coming days. Of course, 50% of the makeup of the dollar index is from the Eurozone. So tonight's information from the Eurozone, depending on whether we go up or down. If we decline on the euro dollar, then we'll probably be holding on support here. All right, but the key level to watch from a weekly perspective is this low here, this low over here at 101.28, and then the lower level here at 182. At the moment, this week, whilst my candle's saying we haven't moved below, we haven't. We're holding here. We've actually had a week up as well. So we might just be, I'm just going to draw in. Let's get to my day chart. The actual swing at the moment has moved up to a higher top. And we may put in a higher bottom here on the dollar index. We're about there. Forget, just ignore that rejection. All right, so is this area going to hold? We've also got the US job figures coming out tomorrow, the Eurozone interest rate decision today. Is this going to hold, or are we going to move down and through? Now, from this FOMC point of view, my understanding is, yes, we raised interest rates. They may have, in their statement that they release, they may have removed a sentence which kind of infers now that maybe they're on a pause. I don't think they actually used that word, but a sentence was removed to say that, it wasn't a continuing moving forward in terms of rate rises. So maybe they're on a pause, but they may have just moved that so that they could say, give that kind of inflection point, but they can always change their mind at the next month. So maybe we can hold here to move up. We'll just have to keep monitoring, okay? Now the S&P 500, that's obviously erroneous as well. So I don't know why I've got a spike on nearly everything at the moment, but there we go. Very annoying. I'm not sure. I'm pretty sure the candle would have been, we're probably just trading inside yesterday's candle. So let's just ignore today's because mine's obviously incorrect. And are we holding at this top? All right, we have a number of, these are weekly tops. There's a top here, there's a top here, there's a top here, and potentially forming another one here. So kind of a 1, 2, 3, 4 triple top area that we're holding at. Now, if we're going to start to decline on the stock indices, we need to break below this low because theoretically that's a higher top. So theoretically, we could still hold here and move up and then put a higher bottom in this area. So it's rather difficult at the moment. Some of these instruments not giving you a clear, strong trend. And Slav, saying you don't have a spike on yours. Well, I'm using a demo account at the moment, so I do have a live account, but I don't want to broadcast my live account number. So hopefully it'll fix itself up over the coming days, or I'm going to have to go in and fix the data up myself. But we will wait and see. All right, so still very much range bound there on the SP 500. So yeah, we're getting a little bit of picture of uncertainty. The market doesn't quite know which way to go. All right. I know my live chart's not spiked up there. So clearly something erroneous has spiked into my charts. All right, so a little bit mixed at the moment. The market's obviously looking at the US dollar. We know gold moved up yesterday. I could start with gold. Slav, I don't know whether yet. I know we were discussing last night, looking up there. I just need to update some of this information. So the big question for all you gold traders, the monthly chart, is up there at the top. Are we going to hold there and create a triple top? And I'm guessing you, Slav, from your commentary there, you must have shorted from. I know somebody else that shorted up there as well. So is it going to hold, or are we moving above? We actually went to a new high by the looks, but the long-term high there is at 2074, and the high at the top is at 79. Now, the big question will be, are we going to start to reverse down from that level? I mean, the monthly trend is theoretically up to a higher top but I mean, I don't call that change in trend from down to up. I call that equal highs. So the weekly trend is up. All right. Very strong rejection. We obviously got there at the start of the day when this new candle formed. In fact, maybe I should have, let me just refresh. Does anybody know what time of day that went up there today? So it must be at the start of the day, hey? Is it on this current candle? All right, so it's saying it went up there in 2 minutes, so obviously a whole bunch of stops went off for whatever reason. Not on. Maybe it looks like it happened. Let me drop this to the 15-minute chart. Looks like it might have happened at the start of the new day. Maybe there was a lot of thin orders there. Some stops went off and tripped it all the way up there. So at the moment though, this high here is offering some support. So the question is going to be, do we follow up and through? Right, it's too early to tell at the moment. I mean, today, obviously, if we end up with a candle that looks like that today, and then we break the candle low tomorrow, then we can start to think about a reversal. At the moment, we'll have to wait and see. Need some more information. But certainly, if we finish with a day that looks like that at the close of the day, breaking that candlestick low is certainly a trigger for a reversal. Then it's the question of, do the sellers flood in and push it down and change the overall trend here? I mean, the structure here at the moment is still up. We've moved up from a higher bottom, taking out tops. All that may happen is that we pull back to a kind of a 62% level. We could pull back to these tops here and still hold the trend. All right. So I'm sure there's lots of people thinking about shorting up there. Trend though, we don't have a day chart shift of trend, but we may get a signal of a reversal tomorrow. All right, so keep watching. Now, of course, if you want to be aggressive through the course of the day, we may well move back up within the range. Let me get rid of that line. Within the candle, the candle that's forming at the moment, that's the high of today's candle at the moment. That's the low of the candle down here. You could look to see if we can get back up to the high levels. If you're not, if you didn't take advantage of that short up there, can you take advantage on a move back up into the top area there? So the 79% level at the moment is at 2068. The major high is at 2074. So of course, in that area up there, if it revisits and you see your setup to sell, that is the obvious area to look for the short. All right. So it'll be interesting to see how that develops over the next trading days. All right, let's head over to the euro dollar. Of course, I've got this nasty spike in here, but key levels to watch. I can get them from the day chart at the moment because, in fact, I can get them from, I can start to talk about this on my weekly chart because there's a key level there. Last year's trading range, high to low. We know that's an erroneous spike. So 110.75 is the 79% level. We've been up to about, I'm going to look at my live charts, been up to about 110.90 approximately. All right. So we've been a little bit above new high for the move. I have to double check if it's a new high for the move. What was the high of that candle? So I'm going to have to confirm we got a new high of the move because I can't keep oscillating from one set of charts to another. But we may have gotten very close to the top of that weekly candle, but clearly at the moment we are holding below 110.75 now. So any upward move at the moment is still getting resistance at the 110.75 level. And I'm still questioning in my head, you know, with the 79% retracement level of the yearly range from last year, this is definitely an area where the market can top out at. We just keep coming up to the level and then selling back down. So is it going to call a significant top? We might get a shift of ECB fundamental news tonight. We'll have to wait and see. All right, so it is very high up there in price. So you almost certainly want to be looking to be a buyer on a dip rather than chasing price. All right, so it is in an uptrend, high tops and bottoms here. All right, and we're pulling back to what is the weekly. Let's go back to my weekly chart. This weekly high here at the moment. We've pretty much pulled back to that level as we're waiting for the Eurozone interest rate. Is that now being support? Because for the most part over the last 3 or 4 weeks, it's been resistance until yesterday where we moved above it. So that's the key level to watch for support. All right, let me get my, very difficult for me to do it with that big spike there. But there's a level of support at 110.33. All right, now you could be looking for a trend line break in this area if you want to trade to the upside. Of course, you've got the difficulty of the interest rate decision coming out. So it's going to be very difficult to hold a position. For me personally, looking at, let's go back to the higher time frame because I can't work without a 50-minute chart. You know, the high is up here. This high over here at 110.75. This high here at 110.95. So the 111 level, depending what price does, we're definitely getting driven down ahead of 111. So I would be watching, you know, 111 is the high area at the moment for the pair. And maybe support's coming in now at 110.33. So once the news event's done, those are really the levels I'll be watching to see how price reacts around, right? All right, I'm going to move to my Euro Yen. All right, no spikes in there at the moment. Hopefully it doesn't come in. Now, from a day chart perspective, we're very much in an uptrend. I did discuss this double bottom that came to fruition yesterday. And it actually called the market right at the 200% level. Now, whether that's going to call a long-term top or a short-term top, but clearly it did not like it up there. And there is a level of resistance from the monthly chart from a long time ago that the market's streamed up to. So the monthly chart here. There's 3 lows over here of significance. That one there, 150, 170, we've obviously traded to. Now we're not able to hold above this high, which is, now when I see price move above levels, I want it to hold above levels to continue the trend. If it can't hold above a significant, say, resistance level that's moved above, that concerns me that the trend is running out. All right. So it can't hold above that top. At the moment, there's another significant monthly top here, 148.39. So structurally, the weekly trend is up, but we're obviously down for the week. That does not look positive. If we finish like that for the week, I'd anticipate we're having a week down next week, but there's still 2 days to go. So at the moment on the day chart, we're structurally holding to the uptrend. We do not want to move below this level here at 148.39. If we do, that is a sign of weakness and we could be getting a trend change. So at the moment, the day chart trend to hold needs to hold in this day support level at 148.62 and monthly level there at 148.39. The 62 level lines up at 148.32. All right, so there's a clear area there that you can watch today after the interest rate decision. I'd say 148.39 down to 148.32 with the monthly level and the 62 level. That would be a level most definitely to watch to see what price does around that level later in the day. Does that hold? And then, you know, if it does hold and we start to move up over the next 24 hours, watch 149.77 as your resistance level. Can we move back above that level? All right. Really, for this to hold its strength, it should have really held it above 149.77 when we took the top out, and it's not doing that. So let's just drop it down. Time frame. The imbalance I drew in the other day, clearly price is coming down to fill all that imbalance. So if you get good at these imbalances, when you see these very, very strong moves and you see an imbalance form, you know, one thing you don't want to be doing up here is chasing price because it'll often come back and fill this imbalance. So if you can see an opportunity to get short, this imbalance, you know, is the target. All right, so this is the area to watch. Let me just refresh the charts. I think I'm missing some data there. There we go. All right, so 148.62 is the day level. And there's your monthly level. There's your 62% level. All right. So when the Eurozone information comes out, can we hold there and start to turn around? What I am noticing today is we can't get to the central pivot point. So what that tells me intraday, and we couldn't do that the day before. So the day that we rushed up, which was, well, Wednesday, Thursday, Wednesday, Tuesday. Tuesday, we rushed up and reversed. The next day, we couldn't get to the central pivot point. That just shows weakness. Today, it's the same kind of affair, same sort of distance where we can't get to the central pivot point. And that's just weakness intraday. So it is showing a weak hand intraday, not much strength. So I don't know whether this support area can hold, but that's the area to watch for support if it can hold today. We could spike up that monthly high that I was discussing, 149.77, the higher level of monthly resistance we broke above. Price could easily spike up to that level through the course of the day when the news item comes out and then hold. You can see intraday here, yesterday we came back up. We broke below, held there, moved below, held here, moved below, rejected and dropped back below once more there. So clearly people are wanting to sell above 149.77 now that we've moved below it. All right, so we may well be on the sell side of this pair, but those are the levels to watch at the moment. Let's have a look at the pound. All right, for some reason my pairs to the US dollar all got spikes. Now we've been up to around about, let me look at my other charts. Been up to around about 125.95. You can follow along on your charts for the exact price. Now this is like an 8-week uptrend at the moment. It's getting long in the tooth for a trend without a pullback of any shape or form. That is worth noting, but we're starting to hold above 124.48 monthly resistance now being support. The low of this week has been at that level. All right. And at the moment, we are or have been withdrawing down from the high of the day. But this is in an uptrend on the day chart. You know, you want to be looking to buy a dip, and I'll put out on Telegram today, this high point here at 125.46. That's day support, and the central pivot point's at 125.42. So if I drop it down to the 15, well, we're going to have a big spike. All right, can't really work that, can I? Let me just drag that. All right. Can't show you current price, but I can show you where the pivot points are. And we've been down a little bit short of this pivot point at the moment and day support. Okay, so whether or not we can get down to there, that's the level I'm watching for intraday support at the moment on the pound. Can we pull back to 125.46 and 125.42? Now we're getting some support ahead of that level at the moment. So that being said, maybe we can't get down there. But we're trading at 125.73 at the moment. Moving back up towards the high of the day has been at 125.93. Now, maybe we have put in some short-term top here. That's the spike from the FOMC event. See all these attempts really couldn't move too much beyond there. So maybe it's getting capped up there in the short term, but high time frame trend is up. You want to buy a dip. You don't want to be buying too close to the top. So if it doesn't offer you that, just be patient. Wait to buy a dip that's away from the top where the selling pressure is coming in, and be patient. All right. You don't want to be buying at the height of where the market spiked up to yesterday. You want a price to move down. And the area I was looking at here was this is where price moved down to after the FOMC. All right. So that's where we spiked up. That's where we pulled back to. In all probability, there's lots of buy orders in that area. So that's the area I'm watching if we can move down to that area today. All right. I know it's not great at the moment because my chart's doing the best I can with my charts. Let's move over to the Aussie yen. Now, Aussie yen has had a roller coaster of a week from Friday moving up. That was Friday with the Bank of Japan monetary policy statement. Went all the way up to test March's high when we had the interest rate decision in Australia, and then we've sunk all the way back down. So I'm still looking at this range as the dominant range from high to low. I colored that in on Tuesday, showing you March's high, February's high, and January's high. So there's an area there of 3 monthly highs, clearly being watched by the market, rejected and moved down. And this high here is April's high. So we've rushed above April's high, held at March's high, and we're back below April's high. So for me, that area becomes resistance. I know this day chart's in higher tops and bottoms at the moment, but moving above that level with some significance, we should have held above that level or held at it when we pulled back, and we couldn't. All right, so at the moment, I'm just watching for price to pull. Maybe can we rally back up to 90.51, which is a monthly low over here, to last month's high at 90.77. I'm going to watch that area to be resistance. Now, price might not get there, but I'm giving you plenty of notice. That's the level I'm watching. Slav, I know you shorted it up there. You still short? Or did you clear that out? So it's nice to see that some of the long-term webinar attendees are really, or you say you shorted the Aussie. I thought you were shorting the Aussie yen up there. All right. Well, so you shorted the Aussie up at the tops. All right. So at the moment, I'm just waiting to see if price can come into this area. We can see once we move below on the 4-hour chart, see how we came in and moved back down. It's already starting to show you that the sellers are holding price. Any movement back into the area now being held. So just going to be watching to see if this can move back into the area over the next couple of trading days, even to next week. Now it won't be a perfect head and shoulders because this is a massive higher bottom, but really this high point here, this is a whole false break, and then it falls back below. So you look at that top to be resistance. trade down from. All right. And I'm looking for a failure to trade all the way back down to monthly support. Now, I'm not just going to trade here. I'm going to let price move up to there if it can. And then I'm going to drop down to a lower time frame and just see what price tells me on a lower time frame. All right, so you're telling me you're short the New Zealand yen. Okay. All right, so at the moment, if we look at let's have a look at the 15-minute chart now, there is the buy side philosophy here. We've probably got around about a 62% retracement. There we go. There it is. So there is a possibility that we just rushed up, we've fallen back below, and we could just move through the area that I'm watching to trade all the way back up. You have to work out yourself the overall direction that you think price is moving in. The monthly chart trend is down. The larger range that I'm looking at, we've just been trading back up inside it. So I'm taking the short side, but we could once more, have a move like that. So you need to work out yourself which side do you want to trade on. On the 15-minute chart, if that's the side you want to trade on, you could be looking for a trigger. Trend line break to the upside might be a trigger. All right, but if you're trading to the upside, of course, you want to be watching monthly resistance at 90.51, last month's high at 90.77. If price starts to stall there and you get long, you need to lock in your profit and maybe take profit. All right, so that's the barrier that I think could hold the market if we get a rally back up. So I'm going to be watching that area. You can see again here, as we moved down and through yesterday, it was resistance here, into, back down from, this would have been probably the FOMC area, I think. And of course, we've been moving down. All right, so make a decision what side of the market you're on. Are you on the long side of the debt or the short side? You might get a trigger here to go to the long side. Aussie dollar. All right, got another spike. Makes life difficult for me. I'm just going to have to do high analysis on my pairs to the US dollar. Looks like all my US dollar pairs have got a spike in it. That's obviously erroneous. So apologies. Now overall, the weekly trend, forget that spike. We have a lower bottom, lower top. Okay. It's a little bit consolidatory in here. We had an unexpected rate rise. So we've had a spike up this week. And to the day chart here, we're actually lower top. Well, that's the final top, bottom, lower top, lower bottom. Are we putting in a lower top? So that's the highest point of the week just here. And if I draw a fib in across that range, it's a little bit beyond the 62, but clearly there we're holding at the 62 level over the last two trading days. I don't think we've been up quite to that level today. Let me look at my other charts. Today's high, it's a fraction short 67. So maybe, we've hit the 62 level again today, but we're obviously holding there to the 4 hour. Now you could adjust the fib to go across the whole monthly range. And Tuesday's move up on the interest rate held at the 62 there. Now, I can't show you in here exactly what it looks like on a 4 hour chart, but the area of 66.81 up to 67 at the moment is being held as resistance. All right, so anything getting close to 67 at the moment is where the sellers are capping any moves up. So that's a level to watch, I think. To look to structure a short on a setup, if we have another revisit up there, 66.81, which is daily resistance, and then the 67 level. All right, that's the area we'll be watching if you want to try to manufacture a short. Structure there on the day chart still down. Higher time frame trends are down. Okay. No point me going to a 15-minute chart because it's difficult enough to hear on the 4 hour chart with that bad candle. I could just move that over. I don't think move it over is going to give me any more anything I can show because that. No. All right, I'll just have to leave that as that. Euro pound. Now in the middle of a range. We're actually holding, there's a couple of ranges here. There's a broader range and a range within a range. I just color. This area is the weekly range. And we're starting though now to hold in between. There's a support low here and a support low there. Now we're actually holding within this range. All right. And price is just stuck in the middle. When I can clearly put a range together, I don't like to be trading anywhere but at the outskirts. All right. So that's the current range. I might just leave that to the left. There's a larger range. So at the moment, looks like this is a lower top at the moment. So I will be watching down here at 87.54. What happens down there? All right. Now we may not get down there, but it's always a question of once you know you've got an established range, you want to trade the outskirts. Let me just do a bit more work. We talked about this range. So the top of my range on the daily chart perspective is that top just there. And let's call it that low there. That was fractionally lower, but let's just use these two. So what I would do is draw a fib from that high to low to establish my range. So I'm on my 79% level at the bottom here at the moment. And then in a perfect world, I would like to be trading down here at 87.45 where support is. But now that we've moved up from there, we may not get down to there. We may, now that we've moved up from that level, we may be putting some price action in here that goes for a pullback to trade up to the top of the range, okay? So with that in mind, it's difficult to trade this pair today with the ECB coming out. Gotten rid of my fib. All right, back to this. I'm going to end up deleting everything. All right. If we can't get down to the bottom of that range, draw a fib from that high to low, from the low to high up like so. And then you have a 79% fib down here at 87.69. The bigger range fib is at 87.78. So a pullback area, let's assume we can't get to the bottom of the range now because that's already been hit and support's coming there. That would be where I would start to watch for, as I was saying, move up, look for a pullback. 79% level of the new range I'm drawing is down at 87.69. The 79% level of the actual range is there at 87.78. So I'll be watching that area for potential support to move up. All right. Of course, you're going to have to wait past the Eurozone interest rate decision because that could go berserk. Okay. All right, move on to, we've covered the Euro yen. All right, it's getting support down there at the moment. What's the euro dollar doing? I have to check my other screen. Right, euro's having a little bit of bounce up from that 110.33 level. Cover the pound pairs. What's the pound doing? It's going to New Zealand yen. All right. Getting some support there on weekly supports. 83.86. Bigger picture here at the moment for me is this is the bigger range. And where we've topped out at this week at the moment is where the 62 level overlaps with two weekly tops. So we could actually be creating over the longer term. Let's just look back at last year's price action where we had all these weekly tops forming. We could be getting the same sort of formation at the moment up here along this area here, creating a lower area of resistance from the whole area we formed last year. So that would be the area that I'm still watching. All right. So in the short term, we may be getting support here, 83, 86, to trade back up for a retest up here. Okay. My bias from the high time frame look that I just showed you is down, because that's the move down. Looking at this corrective to the 62 level. Is that going to be a long-term kind of double top? So I would just be waiting to see if we can get back up. If that is an interim low at the moment, obviously feeling some of that imbalance is 79% level is pretty much very close to 84.91, 84.98 is 79. I would be watching for a rally back up to retest. Now, of course, you could trade up that way if you want to, but I would be, you know, if you haven't shorted up from there already, I know one of you have, that's the area to watch. Clear resistance up there, it's proven. It's all structured in line with the high time frame trends. So that's the opportunity, I think, to watch for and move back up into that area. Now, of course, you could trade up if you want. Just move to your 15-minute chart and look for a trade opportunity. And most immediate trend line that you could trade for a break would be there. I don't really like trading trend line breaks like that when they're so flat, but good close above those two tops might be your trigger. You could watch as well for a further move down to this level of support that we're clearly holding on at the moment today. We come back down to there again today and start to hold. That may well offer you another opportunity to trade down here, to trade up from support at 83.86. So you can clearly see once we move back above that level today, once reject, move below, back above, held, it comes back down there again today. Expect maybe support can hold once more to move up if you want to trade to the upside. All right. But for me, my bias is to the downside. I know price has to get up there for you to look at the area to shorts, but price might not get to that level. Price may from going long, price may just come up very short term. Because clearly yesterday was massive selling, and then nose dive down. So I don't trade the counter moves. So I just wait to see if price can get to my level. All right. I don't try and trade both sides of the market, but make your decision. Are you on the buy side or the short side of that pair? What we might also see, even though I'm looking at the higher level at the moment, so over the next couple of trading days, whilst we're above this level at the moment, this was through the latter end of last month resistance. So we might actually see a move below that level. All right. So whilst I'm watching that 79% level at the moment, if that's the way things hold, price may simply by the end of the day be below that level. And we continue to move down, and then into next week, we're actually watching this level to be resistance, trade down. Okay. All right, so watch those levels. At the moment, 83, 86 is support, but that could switch to resistance. I'm watching the higher level up here at the moment for a retest. New Zealand dollar. All right, don't have a spike on here at the moment, but that may well update. Now, we might just stay on this time frame for a moment. I'm concerned if I move to a different time frame, I'll get a spike. Now, so I'll just stay on the 4-hour chart. The fib's drawn across the whole months of trading. Okay. And what I drew in on Tuesday was that imbalance. It's just remarkable how prices stopped at the top of that imbalance. All right. Now, what I was noticing today, we could come up higher. You just have to make a decision yourself at the moment. Is there's a bit of a Left shoulder, head. This is a lower bottom and we're moving back up. All right, we've tested the 79% level. So are we forming a left shoulder, head, right shoulder? We've come up to fill the imbalance that got formed on that drop back last month. There's no more imbalances there really to fill. They've all been filled. So maybe the market has just moved up to fill the orders up there. That's, the market knew the orders were there. So the market, the market knows where the orders are, where the imbalances are, and it likes to move back to those areas to fill the orders. And so the market's moved back to that area. It's clearly filled the orders potentially. So are we now starting to move back down? Now this is a day chart high. So whilst I've got the range there for the month, when there's the 50% level, if we use that high for your fib, you can see we're in the 62 to 79% zone. Let me just put that back in. All right. Now we could go up to the 79% level, but maybe we're topping out. Let's just draw in this little head and shoulder affair here at the moment. We can take it down to the 50-minute chart. All right, so there's your left shoulder. There's your head. Yes, we got a little bit above it early in the day, but we've moved down. See how we tagged the 79% level exactly, which lines up with that top. Now we might come back up to that level. If it do, you just need to decide, do you like the pattern? Do you want to trade it? All right, so there's your left shoulder, head. Potential area for your right shoulder there. All right, dollar Canadian, still very much got this very much bullish structure on the weekly charts. Rising bottoms, higher top, pulled back. Got support just below the 79% level. Did have a nasty rejection last week. And the line I've got here is a monthly top from back in time over here. So obviously price needs to move above this monthly resistance and that weekly top here. So your resistance levels are at 136.64 to 137.05. The day trend, put out on Tuesday, my Tuesday video, would this top hold as support? 135.53 to move up. So we put in a higher bottom here. Now we just need, if you are on the long side, this isn't the best area to be looking to get long because you're so close to resistance up here. All right, so sometimes you just have to pick your battles. Long-term position is definitely for a move up. Your opportune time was early in the week to get long, as support was starting to show here at 135.53 approximate area. Okay, now price may come back down to this level. We may consolidate. We could come back down to 135.53 and hold. So let's have a look at here on the 4 hour. All right, you can see it's very consolidatory at the moment. Consolidated here, popped up. It's just chopping around at the moment. Of course, we've got the US and Canadian news items coming out tomorrow. So this pair potentially won't do too much for those events. And of course, the dollar Canadian's got a double whammy because it's got two job figures all in the same currency pair. All right, but trends are up. So look to be buying a dip. Can it move back down to your 135.53 support area? And what you could do, just eyeballing this, I'm pretty sure that's 79%. If you draw off, that's the lowest point of the week. If you draw a fib up like so, you're going to see that the 79% level coincides with your day chart top. All right, so that's a very obvious area of support that the market could respect. If you wanted to just buy the dip, as I said on Tuesday, this would be a great area just to put your stop underneath there. We couldn't get in this area here, we couldn't get down to that area. So clearly the buyers, these are kind of order blocks. That's where all the buying went before we pushed up. Then we had another block here where we then pushed up. All right, so it's just creating these blocks of orders. You might find that a block of orders forms here to move up. So that's the area to watch, 135.53 and the 79% fib level there. All right, moving on to the dollar franc. This will probably have a big spike in it. There we go. All right, so clearly price hasn't spiked up there. Let's have a look at the monthly chart. This just continually is moving down at the moment. It's getting to very low levels, and I would be very concerned to try to be selling down at such low levels. All right, now we've moved below this monthly low here. At the moment, that's at 89.26. We're actually on the weekly chart perspective rejected it over the last couple of weeks, but it's not wanting to hold above it intra-week. We keep moving down, the next level of major supports at 87.57. All right. So we are definitely getting down into very cheap prices on the dollar franc. From memory, Swiss Central Bank doesn't like it at such low prices. So that's, look at the long-term level of support here. This is often where the central bank comes in, the Swiss Central Bank. All right. So whether they're going to intervene, they often intervene, whether they're going to intervene at these low levels, we'll wait and see. All right, weekly charts, forget the spike up. So we have a weekly area of support here, 88.71. We're pretty much at that level right now. This line here is the daily level. So forget the spike up. We've got lower tops and bottoms at the moment. We did spend 1, 2, 3, 4 days above 89.26, which is the monthly low area. But at the moment, clearly the market's now decided that it wanted to not hold above anymore, and we're testing the lows of the last 2 weeks here. All right, now that's an erroneous spike, so I will draw on my 4-hour chart a fib over the current range there, and the monthly level of support that we've moved below at the moment is 89.26, overlaps with the 62 level. So that would be an obvious level to look for price to rally back to, and then can you see a setup to sell down from that level? Okay. Of course, we've moved below these April lows, but quite clearly, last month's low, which is here, but quite clearly we can't exist below there. We can trade below, but we can't exist. So you may well start to see the monthly low of last month hold as support, but clearly at the moment the trend is down. So if there's anything to do there at the moment, it's look for the opportunity to sell a rally. Don't go chasing the bottom of the market though. We're getting very low price down there, and I never like to sell at a low. I always like to look to sell a rally, like a 62, 79% retracement. So I'll just watch for those. So they're saying 62 level overlaps with your monthly broken support at 89.26 at the moment. All right, getting into dollar yen, which has got a massive spike. All right, just going to check my other charts so I know what the low is on the dollar yen. All right, it's coming around about 134.10. 79% levels here at 134.03. All right, so at the moment, I'm just going to stick on the 4-hour chart because going to the other time frames at the moment is very difficult. This is the move up of last week. That's a day chart support low. That's a higher bottom on the day chart to a higher top. And then this pullback has gotten support pretty much at the 79% area. Just having a look. I think we've got a fraction short of that area. Somebody can confirm that to me. But you can see with the very impulsive move we had here, where we created this imbalance from the Bank of Japan policy statement last week. All right, I'm just putting the imbalance in there. It's close enough. We've been filling that whole area. We pretty much come back down to where it started, and then we're getting short-term support. We could be getting long-term support for another higher bottom to come in that area. I can't drop to a 50-minute chart to show any kind of idea of a potential entry because my 50-minute chart won't show properly, but you can look at your own charts. You know, we're getting support in the short term around about 134, 79% fib. We could be seeing another push up. Now, levels to watch is this level just here, 135.16. That's the major back in time high. It's like 20 years ago. I think you go to your monthly chart and have a look. You'll find it. You'll need to squash your chart in a little bit. 135.16. We moved above it last week, but now quite clearly, for whatever reason, you can see the massive 4-hour sell candle here. The market wanted to get back below there. So whilst we're getting short-term support here, if you're getting long, for those that are buying, you need price to move back above 135.16 quite clearly and aggressively. If we come up to 135.60 and we can't move above, that's the area to look for a sell. That's your resistance level that we move below. You know, that's the clear. If I squash this chart in, you'll be able to see that line there. We moved below, became resistance. All right. Last week, a couple of weeks ago, I should say, we held there once more. The Bank of Japan information last Friday pushed above, but now we've dropped straight back down and below. All right, we may actually start to see a double top form up here from the day chart perspective, long term. So we'll just have to wait and see if these yen pairs all start to unravel to the downside. But if we start to move up, that's the clear area that you need to watch for if you're getting long at the 79% area or just above. 135.16 is the area of concern. Can we move back above? If we clearly move back above, so if we get a nice strong close back above there, let's say the job figures pushes it up, we get a nice good close above there on Friday, then we could well be moving all the way back up to resistance at the top here. All right, but clearly at the moment, from what's come from the Fed, that big rush up last week may have been a whole bunch of people onboarding, thinking that this is going to the moon once more, but then there hasn't been enough buying pressure to move it above 137.90. We're quite clearly capped there. So are we going to get capped at 135.16? You can monitor that. All right, everybody, apologies for my charts this evening. I'm going to have to fix them up some form of fashion. If you've got the same problem, what you'll need to do is, if I can remember, you go into Tools, you go into the History Center, and you have to go in, and if the data doesn't refresh and fix things, you have to come into the different time frames. So for example, I'm looking at the dollar yen right now. So find the dollar yen in your list here. It's in alphabetical order. So click on the dollar yen, and I use, so at the moment, it's telling me that there's definitely data here for my monthly, weekly, day, and 4-hour charts that have been updated today. So, if I wanted to update my 4-hour chart and that candle, that's wrong. Click on the 4-hour. And then you can see the data in here. It's telling me it went down to 124. 63, which is quite obviously erroneous. So I'd have to go and find out approximately what the price was, alter it, double click and alter the low price, click OK, and then it'll adjust it. But what I'm going to do, I'm just going to wait 24 hours and hopefully somebody will fix it up, and then I'll just refresh my charts and it'll all get populated back in. So if you've got the same problem as me, that's how you can fix things. All right. All right, everybody, any questions? A bit difficult with these charts at the moment for me to give the best presentation. Just want to see what the euro dollar is doing. Trading 110.51 at the moment. Or any final questions? What's gold doing? Let's have a look at a chart that at least is working okay. All right, well, if you're a buyer, you know, in intraday at the moment, you're definitely seeing a pullback to day support. And on the 4-hour chart here, 62% retracement of that very impulsive move up. All right, so this is definitely an area of support there. 2032 daily support, 62% fib, 4-hour 62 area. Maybe we're going to start to move back up, just showing an intraday push up there on gold on the 50-minute perspective. I mean, who knows? This could be the buying area at the moment to actually get above where it rejected earlier in the day. Those two sides of the market. Structurally, though, don't forget the high time frames and the 4-hour chart there are all up at the moment. It's just a massive rejection from that clear long-term resistance area. All right, everybody, thanks very much. Give you a heads up for next week. We have Tuesday's live market analysis. Once more, we can review what happened from the job figures, see what is starting to form from there. That's going to be Tuesday the 9th here. 10th of May, topic is how to become a consistent trader. This is all about, I've run this one before, trading plans, journaling, forward testing, got a spreadsheet that I can give you to forward test with, looking at your strategy over a series of trades, 20, 40, 60, 80, 100 trades. That's what you should be looking at. I've got a spreadsheet I can show you where I took 100 trades, put them in a spreadsheet, have statistical information of a strategy, knowing that if I keep trading it, I can see what the statistical profitability is over 100 historical trades. And then, you know, if you've got that data together, you can then have the confidence that if you have a few losses, that's just part of the strategy. Every strategy has wins and losses. They all come in, and wins and losses come in a random distribution. But you need to be, whatever strategy you're trading, you need to be forward testing it, logging that strategy, proving to yourself that over a series of trades it works. And if you can see that it's working over a series of trades, it shouldn't bother you that you have some losses. You're going to have losses. There's no strategy that doesn't have losses. So the thing traders have to come to terms with is, you know, having losses and understanding that a strategy has losses and it has wins. And as long as the wins are more than profitable and they tidy up the losses, your strategy is profitable. But maybe you need to start to look at things more professionally and do the work and prove to yourself that your strategy works, because most traders will flip from one strategy to another. They'll trade a strategy whilst they're profitable over the most recent trades. As soon as maybe they have 2 or 3 losses, they'll just flip to another strategy, which isn't the thing that you want to be doing. So that's Wednesday's topic. We'll go through that and then more analysis on Thursday, okay? So thanks very much. Eurjpy there, thanks for your comment there. Everybody else, have a great weekend. Wherever you are, I know it's getting chilly now, isn't it? Forecasting cold weather next week here on the Gold Coast in Queensland. It's getting cold. No more beach weather. We're getting full long into winter, so wherever you are, hopefully the weather's nice. Enjoy your weekend and look forward to seeing you next week if you have the time. Thanks, everybody.